Hey everyone, thanks for jumping here back again. Today we're going to be taking a look at Chainlink's native token Link, and we're going to be looking at the Link valuation in relation to the US dollar and also to Bitcoin through the risk metric in order to do a prediction on where the price of the token may be heading in the upcoming few months. But before we do get into this one, I would really appreciate if you subscribe to the channel, leave the video a thumbs up and a comment, since almost 92% of you aren't subscribed yet. So let's get into this one. So if you are new to the channel, this is basically the risk metric for Link USD. If you have been here for a while, you probably know what this is, since we've talked about it a million times with other coins like Bitcoin, ADA, Elrond, and DOT. Now, again, to clarify things up, what this is, it's basically one indicator or an index, let's call it, that has 4 variables in it to give us data and to assess when a particular asset is being oversold, thus making it a good investment. And it also shows when a particular coin is overheated and being overbought, making it in need of a pullback, and also flagging it as a risky investment. Now, each individual coin has its own risk metric and they all account for diminishing returns. And of course, you can access this one and get it for free, as well as the other models, by joining our Telegram. It's totally free. All you have to do is join the Telegram group and you will find it pinned. Now, as said, the model shows when an asset is typically overheated. And for Link, the highest it has reached was when the risk was at around 8.8 back in here after the rally, indicating a potential reversal and a retracement, which was the case since Link went up roughly 2,500%. which is a 26x, which is massive to be honest, before seeing a 70% retracement in a matter of weeks, making the price drop from $4.7 US all the way down to $1.5 in September. And since then, Link has obviously recovered and rallied up, but the risk didn't go back into these regions until a year later, making the model comply to the time. Now, currently, the risk for Chainlink is at about 2.8, making it a much safer investment than when its price was between 35 and 54 US, because according to our metric, whenever the risk of the specific coin is below 4, then it's a good time to slowly and gradually accumulate it. And whenever the risk is above 6, so basically in this red area, it means that the risk is getting high and it's time to start selling. I'm not saying you should sell when the risk is above 6. I'm saying you should gradually do it. Maybe 10% in this region, 20% when the risk is above 7, and so on. And the same thing applies to buying. You don't want to put all your money at once and expose yourself to further pullbacks. Instead, you want to slowly and gradually accumulate while the price keeps going down, and that will give you the chance to accumulate more coins at a better average price. Now, as said, the current risk indicates that Chainlink is a good investment, and historically speaking, when we are in such regions, such low risk regions, the price ends up skyrocketing and rallying up. We've had it here back in July of 2019, and this was, by the way, the lowest recorded risk ever for Link at around 0.3. And as you can see, a risk below 1 has never happened since then. And also, the price ended up going almost 300%, which is a 4x. We've had something similar a couple of months later with the risk going again into these regions, and we are currently getting close to it, experiencing the same thing. Of course, there is a chance the price keeps going down if Bitcoin doesn't manage to go above its 21 weeks EMA, because historically speaking, if Bitcoin keeps trending below its 21 weeks EMA, then that usually ends up causing more corrections and further pullbacks with BTC, which will result in alts suffering and bleeding against Bitcoin. Now, some of you may say, why would it be important to us if Bitcoin moves above its 21 weeks EMA? So we are going to be checking this chart, and right here we have Chainlink's chart against the US dollar, color coded by orange, and this is Bitcoin's logarithmic chart. Green stands for Bitcoin being above its 21 weeks EMA, and red stands for Bitcoin trending below its 21 weeks EMA. Now, Bitcoin is trending below its 21 weeks EMA, and you may be asking, why is the color still green then? Well, it's simply because this chart records weekly closes and our week isn't over yet. So by tomorrow night, if Bitcoin stays below 51.6k, which is what will probably happen, then it will turn red. And if history is any indicator, this isn't good for alts in general. But is it good for Link? Does Link follow the alts? So let's see it here. Now, in the last 3 years, we went many times above and below our 21 weeks EMA. But if we narrow this to the periods in which Bitcoin spent more than 8 weeks below the 21 weeks EMA, we have 3 phases, and in each one of them you can clearly conclude that if Bitcoin isn't doing well and if Bitcoin is in the red, then Chainlink won't do much. Yeah, it can outperform Bitcoin like it did here. For example, Bitcoin was trending down in the first phase, going around 37% down from its beginning till its end, and in that time Chainlink went up and doubled in value. Same thing in phase 2 and 3, despite Bitcoin suffering and bleeding, Link managed to do okay. But the big moves for Link against the US dollar came in when Bitcoin was trending up and when Bitcoin was bullish and above the 21 weeks EMA. Like in here, for example, Bitcoin was doing well, trending up, and Link managed to pull up a 500%, which is 6x, and the same thing happened from April 2020 till June of this year. Bitcoin was trending up and so was Link. And this is to clarify that not only does Link go against the vast majority of alts when Bitcoin bleeds, but also to affirm the idea that if Bitcoin stays above its 21 weeks EMA, then Link will do well. Now, if we go back to our Link to USD chart and look at the MACD as well as the KDJ on a weekly time frame, so let me pull them off to clarify things up. So yeah, it's clear that there is still some downward pressure on the weekly. The black line is still heading to the downside and not indicating any signs of reversal. And I would say that this will last for some time. Link BTC has been in this trend for about a year and a half, and we covered this a while ago, and we say that Link needs to bounce back up from this yellow line if we want to outperform Bitcoin. Now, this is happening for the time being. Link is slowly bouncing back up from it. Now, historically speaking, January is a banger for Link against Bitcoin. Keep in mind, I'm comparing Link to BTC, not Link to the US dollar right here. So in the last 4 years, January has been the perfect month to move your coins from Bitcoin to Chainlink if your goal is to accumulate more BTC, since Chainlink outperforms Bitcoin in January. So will history repeat itself? To me, unless we get a bear market pushing everything down, there is no reason for Link to go down against Bitcoin, in my opinion. January will be the time in which Link gains some control back against BTC. And we've talked about it, whether we are above or below the 21 weeks EMA, Link tends to go up against Bitcoin. To conclude, Link is still having a further downside movement, but nonetheless, we can't deny the fact that its current price is attractive and worth watching for. So this was about it, guys. I hope you enjoyed the video. If you did, make sure to subscribe to the channel, leave the video a thumbs up and a comment. Also, as said, check the Telegram group if you are interested in the other risk metrics. Thanks for sticking by and peace.